On today's episode, we are going to take a look at two companies and put them against each other for this episode of Monday Matches. The two companies are going to be Facebook versus Google. So at the end of this episode, I want to see which one is a better investment for me. And no, I'm not just going to choose a random winner. There are a few point systems that I have here that we're going to take a look at in this episode. So we're going to do a lot of fundamental analysis based on past revenue growth, past margins growth, cash flow margins, their balance sheet. And we're also going to take a look at some estimations on their future growth. And all this is going to end up with a point system that's going to show me which one is the true winner. And this helps me because it allows me to not have a purely biased decision. We're going to take a look at actual data and actual numbers, and that's how I'm going to choose those point system. And like always, if you are new to my channel, if you're a long-term investor, and if you'd like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for the support. It truly means a lot. Like always, if you guys ever want to get in contact with me, YouTube comments, Twitter, you can find me on Twitch, you can find me on my Discord channel, which is free to anybody that wants to come in. And finally, everything I provide here is free. These are all my opinions, and I am not a professional, so none of this should be taken as advice. Like always, make sure to talk to a financial advisor before making any decisions. So now that we got that out the way, let's get started. All right, so today's episode, like I mentioned, is going to be Facebook versus Google. Let me know on the comments below right now, guys. Who do you think it's going to win? Is it going to be Facebook or is it going to be Google? And right, just because one is the winner, let me just say this, just because one is going to be the winner does not mean that the other is going to be a bad investment. It's just to see which one is better. And it also helps me see where the overall market is going. And again, it just allows me to learn more about these businesses as I continue to do these episodes. So it's a win-win scenario in multiple cases. If you're a bull in Google, you'll be able to see all the great things about Google. If you're a bull on Facebook, you get to see all the great things about Facebook. If you're a bull in both of them, you get to see how they compare against each other. And if you are new to investment and want to do more investment, check out the link on Webull that I have on my pinned description and on my pinned comment in my description. If you sign up and deposit $100, we both get a free stock, which is great, right? Win-win for both of us. And the reason I chose Facebook versus Google is we're going to take a look in their revenue breakdown in just a bit, but most of their revenue for both these businesses come from the same type of segment, and that's advertisement. So obviously we're going to see that there's some differences between Facebook and Google, but the similarities among them, which is the biggest amount of revenue that they collect, is what allows me to do an episode like this. All right, so first let's take a look at revenue breakdown. All right, so first let's start off with Facebook, and the best place to take a look at their revenue breakdown is let's take a look at their most recent earnings. So Facebook reported earnings on July 30th of 2020, so a little bit less than 2 months ago. So revenue for this company was about $18.6 billion. Out of that $18.6 billion, 18.3 came from advertisement. So that's Facebook advertisement. If you have a Facebook, if you have Instagram, all those ads that you see on those platforms are paid for. So that's where they collect most of their money from. The next, they have other. Other makes up $366 million. That's barely nothing compared to that 18.6. We can see over 95% of revenue comes from advertisement. And what does other entitle? Other entitles the biggest one in there is their Oculus Rift, which is their virtual reality system. Now let's take a look at Google. So Google, their most recent earnings, which ended June 30th, and they reported, they reported same day, July 30th. They reported revenue of about $39 billion. So we can see Google makes almost twice as much, actually more than twice the revenue of Facebook. But we can see most of their money comes from advertisement. Out of that $39 billion, 32.5 comes from Google advertisement. And this Google advertisement comes from multiple platforms. It comes from your Google search engine, it comes from YouTube ads, and other Google properties. They also have two other segments that actually make a nice portion of their revenue. Unlike Facebook, where Facebook over 95% came from advertisement, Google has about $2.1 billion from their Google Cloud and about $4.1 billion from Google Others. And Google Others are like their anything, their Chromebooks, their phones, their Google Homes, any other smart device that Google has would be found in Google Others. Then they have a small thing, which is Other Bets. Other Bets makes up $162 million. It's very small. And this, if you guys don't know, Google owns a lot of small companies that they invested on that are probably in technology that will grow in the future. So their expectation is might as well buy into these companies now, and maybe in the future they might give me great returns. So they have like a drone service company. I know back then they used to have something with smart glasses. I don't know if that's still a thing, but it's more just future technology. And some of my Facebook bulls are gonna be like, Jose, but Facebook has this new game streaming device with Microsoft that they're bringing all the game streamers into Facebook games. Yes, that is true, but the main purpose to bring those gamers in there is to just increase the amount of people in their platform so then they can get more money from advertisement. They also are doing new e-commerce space, and that one I think might grow in a bit, but as of most recent revenue, that has not really taken a huge hit on Facebook's revenue. So the first point for revenue breakdown, I'm gonna have to give it to Google because Google has cloud, it has others, and it has the advertisement, where right now Facebook pretty much only has the advertisement. Next, let's take a look at future growth. This is how is the company expected to go in the future? So now let's start off with Facebook again. So Facebook in the upcoming 3 years is expected to grow its revenues at 17.6% on average annually for the next 3 years, right? This doesn't mean every year will grow 17.6%. Analysts are expecting that maybe 1 year might be like 30%, maybe 1 year might be like 15%, maybe 1 year might be like 5%. On average though, within those 3 years, it'll be somewhere around 17.6. Now let's take a look at Google. Google is expected to grow 14.6%. So we can see Facebook is expected to grow a little bit faster than Google. So here I am gonna have to give a future growth point to Facebook. But let me say this, right now we saw that Google, and this is what I'm trying to do, right? I'm also trying to be as clear-minded, and even though we're just looking at the numbers, we also have to take a look at where the business is at. Google right now makes 2 times the revenue of Facebook. So it's obviously a little bit harder for Google to grow percentage-wise compared to Facebook. So even though Google is growing 14% on average and Facebook is growing 17%, Facebook is growing a lot faster in future growth. But numerically wise, I would say Google will be growing a lot bigger than Facebook. Right now, future growth, we're gonna end up giving it to Facebook at the moment. Next, let's take a look at revenue growth. And revenue growth is taking a look at their historical values. So right now, we're going to take a look at the past 3 years of Facebook and the past 3 years of Google. So Facebook in 2019 grew its revenue 26.6%. In 2018, it grew 37.3%. And in 2017, it grew 47.09%. So this is definitely a heavy growth stock. Anything growing over 20% is, I think, a heavy grower. So this one has been growing 26%, 30-something, and then 40%. This is a true definition of a growth stock. Now let's take a look at Google. Google on 2019 grew 18.3%. In 2018, it grew 23.4%, and in 2017, it grew 22.8%. And again, we can see Facebook right now historically has grown faster than Facebook. So here in revenue growth, I'm gonna have to give it to Facebook again. But like I'm saying, right, just because one is going to be the winner here does not mean that the other is a bad investment. Google, which is such a giant, growing at 20% in the past 2 years, that alone is a great feature in my opinion. Now let's take a look at margins growth. So here we're going to take a look at both gross margins and profit margins. So let's start off with Facebook, and let's start off with gross margins. So gross margins for Facebook in 2019 were about 81.9. In 2018, we're about 83.2, and in 2017, they were about 86.6. So on average, they're somewhere in the low to mid 80s. Now let's take a look at gross margins for Google. So gross margins for Google are 55.6% in 2019, 56.5 on 2018, and 58.9 on 2017. So we can see gross margins right now for Google are a bit lower than Facebook. But now we have to understand, why is the gross margins for Google a lot lower than Facebook? The thing we did is Facebook has multiple other segments. I'm pretty sure if we were just looking at the advertisement segments, the gross margins will be very similar to Facebook. But remember, Facebook is not developing the amount of hardware like Google is. So Google, all that hardware tends to have lower gross margins because you're spending more money to get that revenue. So that's why we see a lower gross margins than Facebook. But now let's take a look at profit margins. Profit margins, let's start off with Facebook. Profit margins for Facebook were 26.1% on 2019. They were 39.6% on 2018 and 39.2% in 2017. So somewhere between the mid 30s and the mid 20s. Now let's take a look at Google. Google in 2019 was 21.2, in 2018 was 22.5, and in 2017 was 11.4. So this is below that mid levels that we would see Facebook in. So again, here we're gonna have to give another point to Facebook. Facebook both had higher gross margins. And again, we explained why those gross margins were higher, but it also had higher average on profit margins, right? The lowest profit margins we saw for Facebook was 26.1, where the highest on Google was 21.2. Actually, it was 22.5, but still, the highest profit margins for Google is still not as high as the lowest profit margins in the past 3 years for Facebook. All right, so what's next? Next, let's take a look at cash flow margins. And you might be like, Jose, it's game over. Google is gonna lose and Facebook is gonna be the winner. I mean, we're still gonna take a look at valuations. We're still gonna take a look at balance sheet and still my thoughts. So those are 3 points right now that I believe Google can come up with. So it's not over just yet. So let's take a look at that cash flow margins. So cash flow margins, I'm taking a look at two types of margins. First, operating cash flow margins. And what's operations cash flow margins? That's the operation net cash flow from operations is the operations they get from their everyday activity. And that's what you really want to see, right? Money, you want to be positive from your everyday business. So operating cash flow for Facebook in 2019 were 51%, in 2018 52%, and in 2017 59%. So somewhere between the mid 50s on average. Now let's take a look at the operating cash flow margins for Google. For Google, they were 33.6% in 2019, 35.06% in 2018, and 33.46% in 2017. So we can see operating cash flow right now. Facebook is taking the cake here, the point here. But there's one more cash flow we want to take a look at. Free cash flow margins. And free cash flow is your net cash flow from operations minus any CapEx expense. And CapEx is usually an expense for long-term investment. So this is when the company is buying new equipment or is buying something new for the long term of things, for something to improve the overall business. So free cash flow margins for Facebook were 30% in 2019, 27.5% in 2018, and 43% in 2017. Now let's see how it looks for Google. For Google, it was 19% on 2019, 16.7% in 2018, and 21.57% in 2017. So we can see, even just looking at the free cash flow margins, Facebook wins again. So wow, man, Facebook right now is killing it. But I'm not gonna lie, I think based right now, we might end up on the tie. I already know who obviously I did the information here. I already know who the balance sheet winner is going to be. I don't remember who the valuation goes, but it honestly could end up as a tie right now. So now let's take a look at that balance sheet. So let's start off with Facebook. So Facebook right now has about $9.6 billion in non-current debt, and has about 900 million in current debt. So about $10.5 billion in total debt, and they have about $37 billion in current investments and $21 billion in cash. So that's close to $58 billion in cash compared to close to $10.5 billion in debt. So this is a very, very strong balance sheet, but I definitely don't think it'll be able to beat Google. Yep, look, Google right now has $103 billion in current investments and $17 billion in cash. That's about $120 billion of quick cash that this company can use, non-current debt of about $14.8 billion. So even though, like I mentioned, right, all these numbers that we're seeing, both of them are really good in terms of numerically wise, right? And both of them have strong growth profits. Both of them have strong revenue growth. And both of them have strong balance sheets as well. But here with this balance sheet, nothing can compare to the power of Google. So Google right now gets a point. So it's 2-4 right now. Google has that revenue breakdown. And Google also has that balance sheet. Facebook has that future growth, that past revenue growth, margins, and also has cash flow margins. So it's still going on. Next, let's take a look at valuations. So here I'm on Seeking Alpha, taking a look at valuations. And there's two valuations here in Seeking Alpha that one can take a look at. The first one is forward PE ratio. The second one is forward price to sales ratio. And first thing is we have to understand where the business are at, what stage they are in their business cycle to truly see which type of valuation we should really look at. Both Facebook and Google, I want to say, have pretty much gone through their true growth state, right? I'm pretty sure when they were truly growing, they were growing at over 50% on annual basis. Now they're growing still at decent levels, but they are already profitable and they're already in a stable place. So instead of looking at a forward price to sales, we're going to be looking at forward PE ratio. So forward PE ratio for Google, Facebook right now for December 2021 is about 24.54. Now let's take a look at forward PE ratio for Google. For Google is actually 25.28. So in theory, just looking at these valuations, it seems like Facebook is a teeny tiny bit less expensive than Google. Yeah, so right here, we're going to end up giving this valuation to Facebook, and Facebook gets this point. But again, that valuation is so small that a small decrease in Google's price or a small increase in Facebook's price can really change that point in and out. And the other thing, we're seeing that, right? Why are investors willing to pay more for Google right now? We did see that Google had that revenue breakdown, had better revenue breakdown, and I believe overall it's just a better known place. But Facebook, we can see, has better growth, has better margins, it has better cash flow margins. So, right, we can see here through this point system why investors are willing to pay more for another company. Now, let's end up giving my thoughts. And this is the final point. No matter where this point goes, though, we're going to see that Facebook is the winner. I personally like both companies. Both Facebook and Google, I think, are great investments. And I would say that I like Google a bit more than Facebook right now because of that revenue breakdown. I am very bullish especially in the cloudy market. And just because Google is in the cloudy market, I wouldn't mind paying a bit more for Google than for Facebook. But Facebook, we're seeing this, they're doing amazing things, right? With them partnering with Microsoft to get that live streaming to Facebook games, with them working into increasing their Facebook shops as well. Even with that, Google, I'm liking the revenue breakdown, even though they have less future growth and less revenue growth and less margins compared to Facebook. I still believe those are amazing numbers that Google is pulling through. So at the end of the day, my thoughts are going to go to Google. That's going to give 5 points to Facebook and 3 points to Google. But remember, like I said, that valuation they're so close to each other that Facebook going up dramatically or Google decreasing dramatically, not even dramatically, just small values can really tip the scale on that valuation and can make this more of a tie. At the end of the day, both of them seem like great companies, so as a long-term investments, I personally would be happy investing in both Facebook and Google. If I was only able to invest in one, I think I honestly would have a very hard time choosing between the two. Both seem like great, but I think a little bit more. I have a little more of me being a little more bullish on Google in the long terms of things than Facebook. But again, this doesn't mean I'm bearish on Facebook. Both I believe are great investments for the long term of things. Again, my opinions, and none of this should be taken as advice. But which one would you guys go with? Would you go with the winner, Facebook, or would you have gone with Google? So I hope you guys enjoyed today's episode. Let me know what you thought about Monday matches. This is I haven't done one in about a month or two, but it's just because it's been pretty crazy. So if you guys have any other recommendations on Monday matches, let me know on the comments below.